Hello, everybody. Right, good evening. Arun Mara here, and nice to see you tonight. Just as everybody starts to come join in, got over 100 people, I think, registered tonight, which is great. Probably all dotted around the country. Now, today, I'm just going to be talking briefly about some tax strategies, some tax ideas. We're in an environment where things are, I suppose, more challenging tax-wise. We've just ended and finished our busy tax season. Well, almost finished. A few loose ends to tie up with a few clients. My team have been working flat out to try and deliver things in pretty damn difficult circumstances, to be fair, because everyone's working remotely and technology, and people still send their books in paperwork, and it's not easy. So one of the things that I know, just to highlight to, which I will talk on this webinar shortly, is making tax digital. That'd be one thing that we really want to get across to everybody tonight. So I've got a few slides. I'm going to be joined by my colleague Harry, who's joining us on the call. Let me see if I can get him on the call, and then we can go from there. Hi, Harry, you there?
Hi, can you hear me?
Yeah, I can hear you, Harry. How you doing? All right?
Yes, I'm very well, Aaron. How are you?
Yeah, good, thanks. So I'm down here in Surrey. Harry's up in London, and we meet occasionally. But otherwise, we're always just on the phone or through messaging to each other. So, Harry, do you want to just get a brief background about who you are and stuff? That'd be helpful.
Sure. Yeah. So my name's Harry Singh. I've been accountant now for 15 years. Started off in industry, and I've actually owned my own business for all my sins in my past life, and yeah, really passionate about helping clients save tax and earn more profit, live that kind of life that they would like to live, more stress-free.
Sure. Yeah, stress-free. I'm not sure. Does it ever get stress-free? I'm not too sure, Harry, but anyway.
we try our best.
Yeah, we try our best. You're right, we try our best. Okay, that's all we can do. So, right, I'm going to just go through a bunch of slides, talking about a few ideas. Harry will probably add a few thoughts as well as we go through, and we'll take it away. So let's go through that. So just a little bit of background myself, for those who haven't listened to a webinar before. I'm a chartered accountant, FCA, lots of grey hair, seen most things, all sorts of issues dealing with clients, accountants, HMRC. I own the Smera business, which is accountancy, practice sales, commercial finance brokers. We run a buying group, so we do a range of things. I also own the Neemtree Dental Group, which is based down here in London and Surrey, and been working with dentists, I think it's actually 18 years now. And prior to my decision to go into running my own business, I did train with PwC in London, which seems many moons back, and I was a banker for a number of years as well. So my whole career has been finance orientated. So I suppose my experience is all around finance, all about tax, all around issues around money. So I've got a lot of experience personally, as well as helping professionally. I've seen clients make mistakes, make bad decisions, including myself. I've made mistakes, bad decisions financially, but you learn and you develop. So let me crack on. So this is good old Albert Einstein. You might have seen this slide before, but he always said the hardest thing in the world to understand is income tax. Now, it's so true in many ways. The tax legislation, tax laws that you have in the UK are, well, developed over many years. And there's always something new in a budget emerging, new ways of doing things. And that's why I suppose it keeps people like myself and Harry and others busy, because, yes. Doesn't it, Harry? It keeps us busy because there's always
most definitely.
Yeah. So whether it's inheritance tax, income tax, capital gains tax, you name it. And then even taxes that we don't even use that often, like stamp duty and land tax and things like that. So we're always going to be busy. And I think in this climate that we've got coming about, post-pandemic, I think tax is going to be something that we will all feel the pinch, because as costs rise across the economy, taxes are an issue as well. Yeah. So anything to add here, Harry, on that thought?
I think one key thing is just, I think everyone can relate to, is the increase in energy bills. So that's added to this. It's outside the kind of tax arena, but it's definitely a stressor. And I mean, inheritance tax, the tax upon a tax. We won't get into that just yet, but
No,
yeah.
we'll do that for another webinar another day, I guess. So dentists then. So let's talk about my experience with dealing with dentists. I suppose for many years, they've always been an easy target for HMRC. Dentists tend to be a high earner. Historically, probably about 8 to 10 years ago now, many dentists entered various tax schemes, and these tax schemes were flavor of the month, I suppose, and people, it all sounded too good to be true. And to be fair, they were mainly all too good to be true. Some people got away with a few things, but a lot of dentists ended up having to pay more tax back, getting into trouble with HMRC. And I think what we've seen in the last few years now, probably prior to the pandemic as well, less of these tax schemes around, and people being a bit more careful and questionable about what they enter into. In addition, dentists I've also seen administratively, they're not so organized, and that's a really important aspect. It's about being organized administratively, because if you have a busy workload, your admin errors occur and errors arise, mistakes arise. So it's about being organized, and that's really important going forward. As I mentioned earlier, making tax digital is something that's all about going to be organization and using digital technology to streamline things, because ultimately HMRC wants your tax and they don't want it twice a year, they want it 4 times a year. So things like that will come into play. And as high earners tend to be, they're always a target for HMRC, especially if their affairs aren't particularly organized and well managed. So in terms of extracting profits though, so dentists, whether you're a company or whether you're a sole trader or a partnership, there's so many ways to extract profits. So what we've kind of listed on this chart here is numerous ways of taking profits out of the business. So if we kind of work through the main one, so let's assume this is a company. The easiest way is to take something out with a salary, PAYE. However, that's usually not the most tax efficient way of doing it. Okay, we'll not come on to that in a minute. But other ways to do things are, you might have tax-free benefits in kind that might be given to you. Things like the cycle to work scheme. Okay, you could buy a cycle and salary sacrifice and get a bike paid by the company.
Mileage claim.
Yeah, mileage claim. Harry, yeah, go for it. What's mileage claims?
So I think, sorry to interrupt you, mileage claim is a massive area, because if you think about some practices and some limited company dental owners, they have to commute quite a bit from their place of from their home.
One practice to another, isn't it? Yeah.
Yes, from one practice to another. And if you've done that, for example, the first 10,000 miles is 45 pence. So you could potentially have 4,500 tax-free that you can take out of your limited company. And and one thing about dentists and HMRC, which you touched upon earlier, was that you have to get your paperwork in order. So they will look at they'll want MOT certificates year on year to see that it's actually that difference. And you need to keep like a regular, what do you suggest, Arun? Keeping a regular kind of diary? Or?
Yeah, a record. Ultimately, it's a record. And I think in this world of digital things, there are various apps that you can use to monitor your mileage claims, that type of thing. You're right. So it all goes back to record keeping. And the days of paper-based record keeping is completely over now. And it's just it's something that we as a firm really frown upon, and we don't really take on new clients out with if there's lots of paper involved, as an example. Other ways of extracting profits are through rental income. So in terms of what that means is that you might own the property, okay, but the company might be earning, you as an individual might be earning the property which is leased or let to the company that you're operating as a dental practice. So you might be having profits reduced by paying rent to your rental business, as an example. Okay. Dividends is the obvious one, and I'll come onto a slide in a minute, but dividends are definitely more tax efficient than paying yourself a salary, but quite often or not, you'll probably pay a mix of salary and dividends.
If I could, yes.
Yeah.
Sorry to interrupt you.
No, please do. It's an open debate, Harry. So.
Yeah, I think the key is your salary dividend mix, and long gone are the days where you could take out circa 30k tax free. However, sometimes we find that certain practice owners may have a partner or a elder child who's working in the business and should be remunerated for that. So there's things to look at, and it's kind of taking that overall view of a client and really get to know them before we can suggest the right salary.
Correct. And if I have to say, we only get to know people if they send their information in early enough, because then we can do it. Because otherwise, if everything's at the tail end of the year, we'll never know, and no kind of effective tax planning will occur. So it goes back to being organised. I know I'm going to bore everyone to tears about that point, but it's so important. In addition, benefits in kind we've highlighted on here. So things like electric cars, the reduced benefit in kind charges on electric cars are much lower. So if you're going to buy a car and put it through your company, it's much better to buy an electric car as opposed to a regular petrol or diesel car.
Yeah.
So such a no-brainer, to be brutally honest with you. Okay. And then loan interest. Harry, what was that loan interest one about? I'm trying to remember now. So, it's probably a loan that you've given to the company, okay, and that loan, and then you can take that interest out, okay, as an income to you as personally. So that's another way of taking profits out of the company, okay. And then there's pension contribution. I'll come to pensions in a minute. It's on another slide. So there are different ways to extract profits from your practice, and it's just about being smart and talking these options through with people like ourselves. Okay, so let me move on. So just as Harry alluded to here, most people, and I know most clients, will have, if they're operating a company, salary versus dividends is the main way to extract money from your company. There's no right mix, but it also depends on if you're getting income from elsewhere, if like a rental income or a salary from elsewhere or earnings elsewhere. That will impact what the best strategy is for you. And
sorry,
sure. Go.
Just to touch on that slightly, sometimes we find clients actually find it more tax efficient just to leave the money in there, and they're living a very frugal lifestyle, and they can leave a lot of their profits in there and not necessarily extract. So just pay the corporation tax and let that roll over into retained profits. Yeah. So that's something to think about as well.
Yeah, it's actually a very valid point, because if you're leaving a relatively frugal lifestyle, if your kids are left home, you don't need it. You can accumulate that cash or profit into retained earnings in your company, because then remember, in a company, you only pay corporation tax. It's only when you take the money out of the business to pay you individually, you'll suffer income tax. Whereas if you were trading as a sole trader, you'll be taxed on everything that you earn. Okay, so really important point raised there, Harry. Okay, so yeah, good valid point. But also, as Harry also alluded to, if your partner's not working or if you have children working in the business, it's important to use their, and if you're not, to use their personal tax-free allowance. That can be used as well. Obviously, they have to be doing something, and has to be an effective role within the business. But if you're not making those necessary claims, then you should be talking to someone like ourselves to help you. Okay.
I think when you have a conversation with your accountant, having that relationship, things pop up. So what we're really good at is getting to know our clients. And, for example, the other day, questions about childcare vouchers and things like, can I put my children's school fees through? Yeah. We won't give all the answers just yet, but it's really getting to know your client, isn't it?
Yeah, and what your plans are and future plans are as well.
Oh
yeah. And then I suppose we've talked predominantly about companies, but really also companies versus sole trader. It's that situation, and you might be a sole trader at the moment, you're thinking of turning into a company, and certainly there could be some advantages of doing that, but there are changes afoot. In 2023, corporation tax rates rise to 25%. So again, if you need some evaluation, we can certainly help you evaluate to think, if I'm trading my business as a sole trader, turn into a company, will I be better off financially and tax wise as well? So there's no right or wrong answer, and it all depends on your earnings and a multitude of factors. But just throwing this point out there to highlight. And if you do go down that route of becoming a company, the process is called incorporation, and it does need planning, it needs organizing, it needs to be done right. And there are various reliefs that can be claimed. So effectively, when you do incorporate, you're effectively selling your business or gifting your business to a new company. And you can either claim something called holdover relief if you're gifting it, or you can claim something called incorporation relief if you're selling it. But that can rise to a substantial tax-free amount in your business, and you're deferring the capital gains tax charge to wait later when you sell the company in the future. So again, it's something to consider, and it's something to Harry certainly helps clients with this. So do you want to add anything here, Harry?
Yeah, most definitely. I think you need to take your time and consider, are you prepared to go through the process? Because it is a process and there are fees involved. However, if at the end of it you have circa, for example, 50K that you can draw down tax-free, and weighing up the cost and benefit to it, it's most definitely recommended. But like you stated, Arun, it's some area that we need to tread carefully, because we've seen recently incorporations done wrongly by other accountants, and it's quite a mess trying to unwind them.
Yeah, totally agree. Okay, so right. So then back to companies here, another tax tip, and I'm sure you may have heard this before, but if you haven't, this was introduced by the government during the pandemic. We have this super deduction. So if you're trying to, so for people who are starting up a practice, and it should be in a company in my mind, and if you've got an existing practice and you want to invest in new equipment, this window between April 1st, 2021 to 31st March 2023 is the window to do this, because if you're investing in qualifying new plant and machinery, you can claim 130% super deduction on this equipment. So ultimately, that deduction can come off your taxable profits, which ultimately reduce your tax bill. So if you've got plans to invest and develop your practice over the next few years, I'd say bring it forward and do it now before you do it basically before you do it. Do it now rather than later. Otherwise, you're missing out on the tax breaks. Okay. So that's kind of a really important point here.
Sorry, Arun.
Yeah, sure.
Just to clarify for the people listening, obviously it's dental chairs. If you could just go into some examples.
Yeah, that's a very good point. So you're right in terms of equipment. So qualifying plant and machinery could be digital equipment like Tero scanners, CBCT scanners, intraoral scanners, dental equipment, compressors. All of that type of stuff would qualify. Even and I think certain things like air conditioning would have 50% allowances available to them. It's like any building cost related or building equipment that relates to that type of thing. But otherwise, general plant and machinery in the nature of the dental clinic, which are usually the pricier items, that will claim 130%. So it's really advantageous to do that now. And I know, talking to Smita, my wife who owns clinics here at the Neem Tree, we've got a whole program of investment up until March 2023 in her clinics, because now's the time to do it. After March 2023, it's not going to be so advantageous for us. So do it now. Okay. So that's the super deduction. One of the other things, and I alluded to on the slide earlier, is the company contribution, company to pay pension contributions. So in a company, you can imagine you're earning 100 grand per year in profits in your company, and you haven't made any pension contributions. You can actually make a contribution of up to £40,000 from your company to your personal pension. So effectively, that reduces that 100 grand, say, down to 60. Okay, so then you did pay tax. The company would pay tax on the 60 grand, i.e., 25% of 60, as opposed to 25% of 100. So it's a hugely advantageous thing to do, because your company's corporation tax will drop as well then, okay? And it's better than paying any salary, because when you're paying a pension contribution, there's no national insurance charge payable either, okay? So think about that. That's an important thing in terms of, if you trade as a company, paying your contributions from your company to your personal pension. And you'd need an accountant, but also an IFA to help if you need some help on that area as well. Excuse me. Then another area is salary sacrifice and pensions, and this is brought to a head. It's being brought to a head now because obviously national insurance charges are rising as of April. I think Boris has pretty much confirmed that, my understanding is. And this is a salary sacrifice is ultimately an arrangement made between employers, which is made available to employees. And it makes pension contributions much more tax efficient. So effectively, the employer would agree with their employee to reduce their salary, and the difference is then paid into a company pension. Now, as I mentioned earlier, in a similar vein, contributions to a pension don't attract the NIC. So therefore, since the salary is lower, the national insurance charge paid by the employee and the employer is lower. So if you're thinking about offering a salary sacrifice scheme, you can offer this to your employees. And if they want to build their pension portfolio, pension pot larger, and they're happy, this is another possible solution to help with in terms of saving some tax. And in this instance, more like saving national insurance. Okay.
And I think, sorry to,
go for it.
To, like you said, you have to look forward, and it's best to make sure that you've got these things in place, because circumstances can change, and having this in place can really help you. So do get in touch with us.
Yeah, absolutely. And I think salary sacrifice, we talked about pensions here, but there's other ways of doing it. I think cycle to work schemes are salary sacrifice, and there are other ways of doing childcare vouchers, I think, a salary sacrifice, if I remember correctly. So there's various ways of doing it, but I'm just talking about the pension one here in this instance. And then this isn't really a tax saving thing, but it's about what's coming. Okay, Harry, do you want to talk about making tax digital, since you're the expert on this area?
Yeah, yes, most definitely. So the government, if you're not aware, has a 10-year making tax digital plan, and there's been various dates, obviously, with HMRC that come and gone and been extended. But the crux of this is that it's going to kick in by 2022. They're going to start. They've started with the VAT, but in 2024, anyone with income greater than 10,000 K a year, self-employed, will obviously have to go digital. Now, it's still a grey area because, as you know, HMRC, they haven't got all the ducks in a row quite yet. But we are on top of this, and we will definitely be your go-to source for making tax digital. The government basically wants to obviously collect more tax, and having more incremental opportunities where they're capturing your data means that we need to change the way we work. So as you were alluding to before, the old shoebox method or stuff, that's just really not going to cut it. A lot of people will be dentists and practice owners will be caught out, and that's where we're here to get in touch with us. And we've got a plan to, obviously, with the software, take it forward.
I think, as Harry said, we've got to April 2024, so we've got about 2 years. So we've got 2 years to get organised and plan a rollout of making tax digital for practice owners and for even associates, because this is not going to go away, and this is going to become part of the compliance process. And you'd rather be able to make sure you understand how it's all working now, early on, as opposed to hitting 2024 and realising, oh my goodness, what do I need to do here? So we will be rolling out services and advice on this over the coming weeks and months. So watch out in that respect. Okay.
Yes. The software provider that we're using has actually enrolled on the pilot scheme for this. So that's going to be that's going to give us a head start in terms of how things are done. So, for example, your last return, some of the returns can actually be estimates, but as long as in your last return, that's the final figure. But we'll go into detail more on that later, isn't it?
Sure. Yeah, we'll do another webinar focused purely on this, actually. Okay, so kind of wrapping up here. So we've highlighted a variety of things here. Okay, we haven't gone into great detail because every situation, every client is different. Okay, but the point I'm trying to stress here is if you've got an accountant, great, and they're doing a good job, fantastic. But if you need advice from an alternative, we as a team can certainly help. Okay, we can help you with the year-end accounts, tax returns, but more important, the year-end accounts and tax are just part of the process. Okay, as Harry alluded to, it's about engaging with us, because then we can understand your business to help you make a better decision. And so the clients who do the best, who get the best out of us, to be brutally honest, are the ones who are engaging with us on a regular basis and wanting ideas, and then planning their financial future accordingly, rather than hitting a one-year compliance type of situation.
Most definitely, because what you've got to see as your data is actually, it's a year old when you file it. So by engaging with us on like, for example, a monthly basis, you get up-to-date figures, especially with the cloud accounting. And you can make that decision. Do I want to get that extra chair or etc.? So most definitely on.
Sure. And then one of the things I've got on here, which is actually, we'll open this up actually. If you haven't looked at it, all these, actually this is more relevant to dental associates, so I won't open it here now, but there's a guide on our website. Just type in on Google dental associate expenses guide. But for anyone who's a dentist, a lot of those expenses for a dental associate are also allowable for a practice owner as well, but it gives you an idea. Okay, so I won't go into detail here. I kind of mentioned this at the beginning, avoid tax schemes. Okay. I've seen the aftermath for some clients, which has never been particularly attractive and very stressful for people. So things like remuneration trusts, I know were flavor of the month a few years back. I think still people are in them and there's problems with them. So just be careful. And I suppose the basic caveat, statement here is, if it sounds too good to be true, then it really probably is. So ignore it. Okay. Do you agree, Harry?
Oh, most definitely. With these things, sometimes HMRC will just give you a reference for a scheme. It doesn't mean they've approved it. Yeah. So that period of 1 year or 2 years, you're in a scheme and HMRC rejects it, you're in trouble, as we've seen. So totally agree.
So other tax saving solutions I've kind of listed on here. I mentioned the pensions bit right earlier, and you have a lifetime limit of 1.5 million. Things that people always miss, okay, which are so valuable are the ISAs. Okay, you get £20,000 per year as an individual, and you have to do it before the end of the tax year. If you've got children, you can have a junior ISA up to £9,000 per year. In addition, carry forward losses from prior years. Don't forget, if you're making losses, and let's say you're starting up a practice, you may have losses. You want to make sure those losses are carried forward to the following year, because they can be offset against the profits. One of the things I haven't mentioned on here, which is a bit more complicated, but you can regroup your business, restructure your group. If you've got multiple companies, a profit-making company, a loss-making company, you can have a holding company above and offset the profits and losses in those companies against each other, which can be advantageous. So we've done quite a few group restructurings in the last year or two. That's very tax efficient. And if you need expert advice on that, certainly come and get in touch with me. There are EIS schemes, and they have to be a registered EIS scheme. CGT allowances, if you're buying and selling property or shares, you can utilize your allowance of over 12.5 grand a year, which is quite a lot of money. Where do I go? Charitable donations, you get tax relief on the gift aid. I mentioned low emission cars. The list goes on and on and on. Okay, and
endless.
Yeah, and there's lots of things, and these are just a flavor of them. But what I'm trying to get across is that if you're too busy in your business doing dentistry, you're not going to be able to realize that these are the other things that can actually make things a lot more efficient, and you could be probably better off by just understanding these things, talking to people like ourselves to help you. Okay.
And sometimes, Aaron, it's the compounding effect of losing out of allowance over 5 years, like
Yeah,
5K.
yeah.
Might not be a lot, but over 10 years, that's 50K.
Yeah, I think that's so true, because if you every year you miss doing your ISA for 20K over 5 years, that's 100K you've invested. And assuming that ISA's growing at a rate, I don't know, 5% a year, it's like that's a lot of money compounded. Okay, so you're 100% right. The power of compounding, that's something for another day on another webinar, to be honest, isn't it? So,
I don't think we're totally allowed to give that
yeah,
specific financial, but yeah,
we can't give specific financial advice, but the whole point is understand your numbers, and if you don't, get someone who can help you understand them. Payroll, slightly aside to this, but it's what we're finding as a result of furlough and all these things. It's getting increasingly complex. So it's so essential to have this organized well, to make sure you're if you're paying your national insurance and taxes, pensions as well, making sure if you're doing salary sacrifice, that's set up correctly as well. So payroll is another service that we do offer, and if you need any help, my colleague Karen, who can help you there, she's great. So it's important to get your taxes in order. If you're trying to raise funds to buy a practice or your house or a property, and ultimately good financial discipline will not only help you save taxes, but help you actually grow your wealth over the long term. So important to understand the positives and the negatives of doing some tax planning. Understand the risks as well. Okay, and our job is not to say it's all going to be perfect. It won't always necessarily be. It's highlighting the risk, and then you understand and make the right decision for you. Okay. Anything to add there, Harry?
No, I think you've put that perfectly correct.
Fair enough. So, in conclusion, there are various routes to manage your taxes, and no one size does not fit all. Bottom line, if you need help, we're the people to help. Did you know we literally look after hundreds of accounts for dentists across the UK, all shapes and sizes. We can help with income tax, corporation tax, capital gains tax, inheritance tax, stamp duty, land tax, you name it, we can help with it. Even VAT we do. Even though dentists can't claim VAT, we can also help with that. So we have in-house, but we also have outside of the practice experts that we work with on a regular basis. So if you're in the market for a new accountant, my name's Arun. We've got Harry, who's also here. Yeah. This is Harry. I don't think you saw this photo coming on here, Harry, but I've put you on here. But one of the things I really want you to do, and I'm going to push here tonight, is if you want to have a chat about your taxes and everything, I strongly suggest you get in touch with Harry. I'm going to. That's gone wrong. I'll open that link up, and you can book yourself a dental tax MOT. Yeah.
So it's 20 minutes.
15 minutes. I've just put it in the chat. It's in the link in the chat, so I've just put sent to everybody. I think to everybody. Is that to everybody? I know everyone. I'll do it again.
Yeah, while you're doing that, just it's an opportunity to really look at the main points, and I've got a performer to look at. Obviously, starting with your salary, dividend mix, look at your expenses. Go through any specifics, and it's not a long time. It's not a long period of time, but within 15 minutes, we can most definitely add value. And
yeah, absolutely. And we can give you an idea, and from that we can then follow up with further various ideas and thoughts and suggestions for you, and just to not just at tax, but it's looking at the whole kind of financial organization. But tax is the main focus here. So certainly give Harry a shout. Okay, he'll be delighted to help. Okay.
Just to mention, I am a vet, so we understand at Samira that the hours dentists work, so we are available on some evenings and the weekend on a Saturday. So don't feel you need to do it rushing around in between customers. You can do it at your own leisure on the weekend or the evening. Yeah,
absolutely. We offer, as we do, with our finance team and everything else, we offer flexible evening calls and everything. So yeah, very, very good point, Harry. So yeah, if you need any help, you know where we are. I think the future, what we're going to see, the government has spent too much money. as a result of the pandemic, bad management. I think the government, I think the tax environment is going to become more complex and challenging. HMRC are after every penny and some. So the key really is to make sure you keep your finances well organized, work with and engage with your accounting team, and people like myself, Harry, Guggan, Natasha, Karen, others have all the experience and desire to help you. Okay, so thank you very much. I always leave with this phrase: you must pay taxes. It's a very American cheesy phrase. You must pay taxes, but there's no law that says you've got to leave a tip. So, which is so true. You do it obviously properly, do it correctly, but do it smartly as well. Okay, so thank you so much. I don't think there are any questions coming through tonight, but what we're going to do, we will share this webinar to everybody, a recording, and on an email that will come out to all the registered people tomorrow. Okay, thank you, Harry. Thank you so much. Okay,
no problem. Thank you.
Brilliant. Okay, thanks everyone. And again, if you need any help, just give us a shout. Thanks very much. Cheers. Bye. Good night.
Bye.
Bye.